Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria. I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on the Nifty, Bank Nifty, as well as on the different asset classes. Now, first of all, let us discuss what we have mentioned in our last video. In our last video, we have mentioned that the primary trend is positive. The charts are getting sharper and sharper day by day. Any dips should be used as a buying opportunity, and Nifty might break its lifetime high in the last week. But Nifty ended on a slightly negative note. It did cross its lifetime high in the last week, but most probably what has happened that still the primary trend is still intact. The sentiment is still bullish. Yes, on Friday after a consolidation of 2 days prior to Friday, Friday Nifty ended on a slightly negative note, but yes, the primary trend seems to be still positive. Now, first of all, let us discuss an important chart which I have observed a couple of hours ago. The chart is the Brent crude. Let us discuss what I have seen on the Brent crude chart. Let me show you the chart of Brent crude. Yeah, this is the Brent crude. Earlier in March, April, and during May or June, we have had a discussion on Brent crude. It was forming a triangle formation. It was showing a weakness, and we have recommended, or we have suggested, and we have discussed that Brent crude might start correcting from those levels, and it might test the levels of 90. Uh, from June 2022, it took 3 to 4 months to test the levels of almost 82, which was the spot level. After that, it pulled back and it has again formed a triangular formation and it has given a breakout. And initially, from these levels, also we have initiated a view that Brent crude might drift or might correct further in long term from these levels. Now, why this view? Now you can see this was a triangular formation, this was a breakout, it corrected. After that, again it made a triangle formation, again it has started correcting at these levels. At 94.95, we have become bearish, or we have initiated our view to being bearish on Brent crude. And the simple reason for that is you can see these long-term moving averages. Now this blue line is 100-day moving average, and this red line is a 200-day moving average. Now when I stretch this chart, you can see here, this is the area. Viewers should just look out for the cursor where I'm putting. This is the area where the long-term moving average is. 100-day is cutting 200-day from above. Now whenever this kind of moving average is cutting from above, I mean to say 100-day moving average is cutting 200-day moving average from above, this is called as a death crossover. Whenever the golden crossover is happening, it cuts, I mean to say 100-day moving average is cuts from 200-day moving average from below. Now in this death crossover, what happens is that 100-day moving average cuts 200-day moving average from above. Now, why I would call this as a death crossover? Because whenever this happens, the trends becomes long-term bearish, maybe for next 10 to 12 months. Now, if this happens, now if this pattern unleash, we will see crude, Brent crude. These are the Brent crude spot levels. Brent crude might test the level of $60. You can see this horizontal line, blue horizontal line, which I've already marked uh, earlier, might test $60 in next 10 to 12 months. From these levels, maybe in next 6 months, we might see Brent crude testing the levels of $75. So any pullback in crude should be used to go short at the higher levels for a positional target of $75 in next 5 to 6 months. And as I said, in long term, maybe more than 10, 12 months, Brent crude might test the levels of $60, which is this particular horizontal line. Now, what would be the effect on the stock markets? Now this has crude going down have a positive impact on the equity markets. Why? Because rising Brent crude is the spoil spot for rising inflation and all sort of things. Rise in input cost of most of many companies. So when Brent crude corrects, it will ease down the inflation, and again many companies, those because of rising crude prices, the the production cost was rising will start falling, and which will result into uh, what we call improvement of the earnings season of that particular company. So this will propel the international markets, European markets, American markets, as well as the Indian markets, global markets, in the upward trajectory. I mean to say, the you know, in short, the trend has become bullish and will become more bullish as and when the crude starts correcting further from these levels. So any dips should be used as a buying opportunity. This is what I have to discuss on the crude. Now let us go to the Nifty daily charts. So the Nifty daily charts, we have been discussing about the rising channels since last couple of months, and still Nifty is in that particular rising channel. It is just on the midway. You can see here it is on the midway of this rising channel. Let me consolidate the chart a little bit so you will have a clear view. It is on the midway of this particular rising channel. The potential of this target is the upper band of this rising channel, which is almost coming around 19,200 to 19,400. Maybe it will take some time. It is just 1,000 points away from Nifty, from the current level. So maybe in next 2 months or 3 months, Nifty might test those levels. But most important thing is that first of all, Nifty needs to cross its lifetime high, which is 18,605, whereas Bank Nifty has already crossed its lifetime high. So sooner rather than later, Nifty will cross its lifetime high, which is 18,605. This is the daily charts. Now let me discuss the weekly charts. You can see the weekly chart. This was last week's chart. It was indecisive. Indecisive means there was no clear trend. It has consolidated. It has opened. It went. It made a high, 52-week high. It made a weekly low, and it ended on a negative note, slightly negative note. So the trend deciding level for next week would be the high and low of last week. So the high is 18,442 and the low is 18,209. Traders should watch out for this highs and low and then trade accordingly in the direction of the breakout. So most probably looking at this particular primary trend, we feel that the trend is positive. So any dips should be used as a buying opportunity, or conservative trader, those who are looking for a clear trend, should wait for Nifty to break its 52-week high, which is 18,442. After breaking those levels, one should create long. But those who want to trade for swing can should have a strategy of buy on dips. Now, friends, let us discuss the important supports and resistance level for the Nifty for the next week. The first support in the Nifty is placed at 18,209. Below that, the second support is placed at 17,969, and third support is placed at 17,838. Whereas on the upside, the first resistance is, as I said, 18,442. Above that, the second resistance is around 18,605, which is Nifty's lifetime high. And above that, the third resistance is around 18,791. So these are the important crucial supports and resistance level. Traders should follow these levels and then trade accordingly in the direction of the primary trend. And the primary trend is positive. Any dips should be used as a buying opportunity. Now let us come to Bank Nifty. Now this is the daily chart of Bank Nifty. Again, as I said, it is into moving into upward rising channel. Let me synchronize the chart. The potential of Bank Nifty is to test maybe 45,000 in next 3 to 4 months. Primary trend is already positive. Bank Nifty is already into an unchartable territory. So looking at the last week candle, we feel that this was a consolidation week. The Bank Nifty didn't go anywhere. It consolidated, which we will have a clear view on the weekly charts. This is the weekly chart. You can see it is an indecisive candle. The high is 42,622 and low is 41,965. So Bank Nifty almost remained in just 700 points. This is the first time which I have seen that Bank Nifty was just stuck in a 700 point range in last couple of weeks. So definitely, as I said, in Bank Nifty also, those who are conservative traders should watch the level of 42,622 on the upside. Once it breaks those levels, one should try to create long position. Or as I said, for swing traders, positional traders, or those who use the Dow theory, the theory of wave pattern, should use any dips as a buying opportunity from these levels. So as I said, looking at the charts daily and weekly, the trend remains to be positive. Any dips should be used as a buying opportunity. So friends, now let us discuss the important supports and resistance level in Bank Nifty for the next week. The important support in the Bank Nifty is placed around 42,222 is the first support. Second support is around 41,918 and third support is around 41,516. On the upside, the first resistance is around 42,622. Above that, the second resistance is around 43,048, and above that, the third resistance is around 43,478. These are the important supports and resistance level in Bank Nifty for next week. As I said, looking at to the charts of Nifty and Bank Nifty, the primary trend is still intact. Any dips should be used as a buying opportunity. Now, friends, let's just come to the third segment of our show, which is option analysis. In option analysis, we'll try to figure out or we'll try to study the option data of Nifty, Bank Nifty calls and puts, open interest, implied volatility, where there is the concentration of the options. I mean to say the build-up of volumes in particular strike prices, and we'll try to figure out what could be the important resistance or maximum where Nifty and Bank Nifty can rise on the upside, and where if there is some sort of consolidation of correction where it can take a strong support. So now let us discuss what we have observed on Nifty calls. In Nifty calls, you can see the action was seen in 18,400 calls, then 18,500 calls, 18,600 calls, 18,700 calls, and up to certain level you can see 18,800 calls. Now here you can see volumes are rising, open interest is also rising, implied volatility is in very comfortable zone. It is between 9.88 and 10.25. Option premiums has corrected. Uh, that is because the Nifty was consolidating throughout the week, and on Friday we have seen some sort of sell-off. It was a minor sell-off, so that is the reason why we have seen that there was some sort of shedding. I mean to say correction in the option premium. Now here on the upside, you can see the major part of the concentration was seen in 18,400 calls. So this could be the major barrier for Nifty. So you can see you can the highest open interest and highest volume looking at this data. So the, this indicates that might be the smart money might have done call writing of 18,400. They might be seeing this as the major barrier for next week. So this could be the threshold level. Once this level is broken decisively, we might see a sharp short covering coming in the next week, which might take Nifty to its lifetime high near the levels of 18,605. You can see here again next concentration of volumes and open interest. So maybe some sort of cool off would be seen, not major correction or a consolidation, but one should take this level 18,400 as a very stiff resistance, and if Nifty crosses those levels, one should start buying that Nifty futures or start uh, exiting from those who have righted or done call writing of 18,400. So this could be the threshold area. If it breaks, then we might see a sharp short covering from those particular levels. So as I said, any dips should be used as a buying opportunity. Now let us see what we observed in Nifty puts. You will see on the charts that in Nifty puts the action was seen in 18,200 puts, 18,100 puts, 18,000 puts, 17,900 put, as well as 17,800 puts. Now here also you can see the rise in volumes, rise in the open interest, implied volatility is in comfort zone between 10.87 and 12.52. There has been a slight correction in the option premium. So nothing major has been seen. But as I said, on the downside also, that 18,000, where the major part of the volume on in the immediate psychological mark, which is 18,000. If it breaks 18,000, then only there are chances that Nifty might drift down to the levels of maybe 17,900 or 17,800. But that seems to be a very, very strong support area. So I don't think so that Nifty might go below 18,000 in the next week. So maybe it might correct till 18,100 and then we might see a rally coming into the Nifty. So for next week, most important level will be 18,400 on the upside and 18,100 on the downside. So as I said, Nifty has stuck in this particular range. Any breakout on the either side should be used to buy or sell. But looking at the primary trend, I would suggest the strategy should be buy on dips. Now, friends, let us discuss what we have observed in Bank Nifty calls. In Bank Nifty calls, the action was seen in 42,500 calls, 43,000 calls, and 43,500 calls. Now, here you can see there has been a rise in the open interest, rise in the volumes, but there has been a sharp drop in the option premium. This drop was because we have seen a sell-off in the fag end, and then some sort of pullback was also seen during the last maybe 30 minutes or 20 minutes. Implied volatility is in comfort zone. It is between 11.91 to 12.58. So here you can see uh, on the upside, the threshold would be 14,000, 42,500. It is just 100 points from the closing, almost above the closing level. Once Nifty crosses those levels, 42,500, then Nifty might propel to the level of 43,000 and above that 43,500. So looking at this, I feel that see the volume. Smart money might had done strong call writing of 42,500. So if it breaks 42,500 decisively, then we might see a sharp short covering in Bank Nifty also. So looking at this particular data, we again feel that our downside 43,000 would act as a very strong support. So looking at this data, we feel that the Bank Nifty has also been stuck in the range of 42,500. Sorry, 42,500, and then next area is 43,000. It is not a support, but it is the next major resistance area. Now, when we'll see Bank Nifty puts, we will try to identify what could be the strong support area. So let us discuss what we have observed in Bank Nifty puts. In Bank Nifty puts, you can see the action was seen in 42,300, 41,900 puts, and 41,500 puts. Now here you can see there has been the rise in the open interest, there has been rise in the volumes. Implied volatility is in comfort zone between 12.69 and 14.38. But there is a drop in option premium. This drop was just because you can see Nifty was stuck, Bank Nifty and Nifty both were stuck in particular range throughout the week. And after expiry, I mean to say Thursday and Friday, smart money might have thought that Bank Nifty or Nifty might remain in this particular range. So that is the reason why we have seen the shedding of the option premium in calls and puts in both Nifty and Bank Nifty. And here also you can see in Bank Nifty there has been a drop in the option premium. So looking at this particular data, we feel that on the downside, You can see here 42,000, there is a strong concentration of volume. Prior to that, 42,300 also is having volume of 20 lakhs, 25,000 quantity of Bank Nifty puts. So if it breaks 42,300, then it can drift down to the levels of 42,000. So I feel that 42,000 would act as a strong support in Bank Nifty, and from there we might see strong buying coming in at those levels. So definitely looking at the chart pattern of Nifty and Bank Nifty and option data of Nifty and Bank Nifty, derivative data of Nifty and Bank Nifty, the strategy should be buy on dips because the primary trend of Nifty and Bank Nifty or Indian markets are positive. Now, friends, let us come to the final segment of our show, which is positional call. In positional call, I have identified one stock. The name of the stock is LNT LTI, LNT Technologies. Now, LNT Technologies, I will show you the daily chart of LNT Technologies, so we will have a clear view. In LNT Technologies, the stock has corrected significantly from its lifetime high, which was 7,580, and it has almost corrected 50%, almost probably 50%. And after that, you can see since May 2000 or April 2022, it has been consolidating in this particular range, making a triangular formation. Now, this triangular formation is called as a continuation pattern. So you can see after a drop of 50%, it consolidated. You can see it is a classical theoretical textbook pattern. It is overlapping. It has given a breakout, supported with strong volumes. It has again pulled back to its 200-day moving average strong support area, and again this support trend line, which was earlier a resistance trend line. So now I feel that L&T Infotech might see a trend reversal in the coming months. So definitely for long-term investment as well as positional traders or short-term swing traders can buy the stock on dips to 4,800. Currently, the level, the closing price is 48.95. So it is almost quoting around 4,900. So 100-point correction from these levels should be used as a buying opportunity. For swing traders, the target is around 5,360 in maybe short to medium term, and for long term, the target is around 5,800. So almost 1,000-point rally can be seen in long run, maybe next 10 to 12 months. So long-term investors can accumulate the stock on corrections to 4,800 for an upside target of 5,800 in next 10 to 12 months. So friends, let us conclude the show. Thank you very much for watching the show. You can give any suggestion in the comment box. Thank you.